Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of What is Driving the Markets, where we discuss key events and address key questions on investors' mind. In today's episode, we discuss the corporate earnings performance for second quarter of fiscal year 2023. India's corporate earnings trend has been strong with 8 consecutive quarters of strong double-digit earnings growth since the contraction witnessed in first half of 2020 amid the onset of COVID-19 pandemic. Going into the reporting season, estimates for the second quarter of fiscal year 2023 earnings performance were downbeat, with consensus expecting a flat to negative performance year-on-year. However, Nifty companies delivered a strong financial performance for the 9th consecutive quarter despite several headwinds. 60% of the Nifty companies reported earnings that met or exceeded expectations. Overall, earnings for the Nifty index grew over 9% year-on-year in the second quarter of fiscal year 2023, while revenue for the Nifty companies excluding banks rose 28% year-on-year. While the aggregate financial performance for the Nifty index remains strong across parameters like revenue, earnings, and EBITDA, two trends continued in this current reporting season. First, margins contraction continued across sectors amid elevated cost pressures and lower realizations amid the imposition of duties on a few sectors. Second, the earnings season was highly skewed. Strong performance of domestic focused sectors like financial, consumers, and industrials helped offset the weakness in global cyclicals like commodities and oil and gas sectors. Now, getting into sectoral performance, banks' disbursements momentum has stayed strong amid improving asset quality as non-performing assets moderated, resulting in lower provisioning and boosting the profitability for the sector. Consumer companies reported strong earnings performance on a year-on-year basis as strong discretionary spends and controlled expenditure helped mitigate still elevated raw material cost pressures and muted volume growth. Auto sector's performance continued its sequential recovery with its earnings benefiting from operating leverage, favorable commodity prices, and strong festive season demand. On the other hand, IT services sector performance was muted as slowing new deal wins, elevated employee cost, and attrition impacted margins. The sector is witnessing a slowdown as clients remain cautious on discretionary spending amid a weak global macro environment. The pharma sector earnings remain weak amid muted volume growth, elevated costs, and intense price pressures in major global markets. Commodity sectors were the worst hit, impacted by seasonally weak domestic demand, higher input costs, and lower realizations. So far in 2022, Indian equities have outperformed global peers by a significant margin and continue to trade at a significant premium. Strong earnings delivery is critical to support stretched equity valuations. The corporate cycle in India remains strong and ahead of peers, with the Nifty index expected to register a 14% earnings growth on the back of a 35% earnings growth recorded in fiscal year 2022, the highest EPS growth since fiscal year 2004. Corporate earnings in India have shown resilience amid minor downward revision driven by weakness in external facing sectors. Resilient earnings outlook for domestic focused sectors, aided by strong domestic macro fundamentals, is likely to balance the weakness in global cyclicals. At this point, I'll take a pause and thank you as always for listening. If you find this podcast useful, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.